Good morning to all of you. It is 11 o'clock. We begin our weekly knowledge sharing webinar from Mehta and Mehta. In fact, today we have a panelist who's qualified all the three professions: chartered accountancy, cost accountancy, and company secretary. And he comes with a variety of multiple experiences nationally and internationally. Not only that, he has been actually in the management as an independent director and many of the organization, and he has got the diverse experience over 20 years. I know him over 3.5 decades when he was a company secretary, where later on he moved, he pursued all these things. He widely traveled across the world. He is also an author of many books, many best-selling books actually. One of the book which he released initially was Finance for Non-Finance, which was one of the great book which was welcomed by many professionals. And in fact, he got an approach, not only a national approach towards the business, but also the global approach because of his varied experiences. And he has been conducting various training programs across the world on a various finance, compliance, and governance related issues. And currently, he is actually, with his expertise, valuation, etc., he has been practicing as a chartered accountant, and also he is such a valuation professional and insolvency professional. And he is also involved in the social auditing as a social auditor. And he keeps advising various accounting aspects like IFRS, Ind AS, etc., and other thing and all, and corporate action. He is having a very great experience. And he is not the first time who is actually in our panel. Many of you would be knowing it. He was actually there with us earlier also. He shared his valuable knowledge. With a variety of the experience from all the three professions, he would be able to appreciate from the finance angle, from the legal angle, from the secretarial angle as such. So we'll have the benefit of greater experience on this particular subject. Coming to the subject, I don't want to take much of your time, because one thing you know, in the 2013 Act, the Companies Act has given
Bala,
wide.
Bala, one more thing about Pramod Bhai is that he, in collaboration with Dr. Chandratre, he has written two articles which were published in the Chartered Secretary.
Okay.
One article was published a few months before. If anyone wants to compute the profits for the purpose of managerial remuneration under Section 198, please refer to the article. It is really a collector's item. Everything has been given in that very comprehensively about accounting treatment, how to compute, how not to compute, all those things. Recently, I think if I am not wrong, last month there was another article of Pramod Bhai, again together with Dr. Chandratre, on the dividends. Am I correct, Pramod Bhai?
Yeah,
Yes,
yeah.
interim
Yeah,
dividend.
You're absolutely right. He has
the dividend
delved.
declaration of interim dividend, the accounting aspects related to that and all. It is another beautiful article. In fact, that Dr. Chandratre is dealing with the legalities and Pramod Bhai is dealing with the financial and accounting related aspects. It is a beautiful collaboration between two authors. I'm sure that many more articles will be coming in the offing, because it is really a struggle for the company secretaries on certain aspects which are accounting related, but falling in the domain of the company secretaries. I think very beautifully he's handling these issues. In fact, that is one of the reasons why we requested him and also ensured that his convenience is there, and accordingly we are organizing this webinar, because today's topic is relating to the company secretaries, but again some people they think it is an alien subject, but Pramod will be able to helpful in a simplified manner how the subject is to be appreciated. Yes, go ahead, Bala.
Yeah, coming to today's topic, because all of
Thank
us,
you,
in
Bala. Thank you so much, and Sudhakarji, thank you so much for those nice words. Thank you.
so coming to today's topic, 2013 Act is given the greater recognition to the company secretaries, because we have been recognized the key managerial person, we have been recognized the expert, we have been actually part and parcel of the board, and we have been told that we are not only responsible under the compliance of the Companies Act, but also taking the responsibility, ensuring compliance of all the applicable acts. Obviously, as Sudhakar puts it, we cannot, leave aloof from the financial part of it, because financial is also forming part of the Companies Act itself. So we cannot let alone ourselves, oh, finance, somebody else is looking after, is not my cup of tea. That cannot be the case no longer. Another thing is there as a balance sheet, financial statement, that is profit and loss account, balance sheet, cash flow, everything. Company secretary is also required to sign. Is he actually certifying something? Is he guaranteeing the accuracy of the financial? Is he talking of the disclosure? What is that he is actually putting his signature, or it is a rubber stamp? That is the next question which arises here. This is the crux of the matter here, actually, really speaking. But as such, since the KMP is already there, Chief Financial Officer, obviously he takes care of all the accuracy of the financial digital related matters. We are not supposed to look into numbers as such. But however, there are various court judgments. One of the oldest judgment, which is actually started in the 1956 Act, which has been come under 2013 Act. We'll be discussing it as the Kinjal will be presenting to us. They are very beautifully said, the related matters. What is the role of the company secretary? He is using the word authentication. That means we are authenticating something. That means with reference to compliances, with reference to the disclosure, with reference to the applicable notes, because again, the financial actually relates to disclosure in a board report again. Because something is disclosed in the financial, not reported in the board report, something disclosed in the board report, not related to the financial, all these corroborative issues which are actually there. It's a great things to know what is exactly the role of the company secretary, what is the responsibility, what is the precautions when we have to take. All the things are all very great. Sudhakar, he has got the varied experience on this, and he will actually share his thoughts with his experiences. But as I already said, Pramod is actually excellent on this particular subject. He will be able to appreciate all the three professional angles, and he'll actually tell us that is one thing. I look forward hearing from Pramod. It is a very great pleasure for me to introduce Pramod, and it is also a very great pleasure for me that I have been associated with him for the last 3.5 decades and over. That is another privilege for me. Welcome you, Pramod. I would request you to share your thoughts on this topic before we ask Sudhakar to share his thoughts.
I think Bala, before that, you have to introduce Kinjal also. Today, she is the speaker, and I think Kinjal also is to be introduced before Pramod comes and talk about it.
Yeah. Today's presenter is actually Kinjal Mehta, who is actually qualified chartered accountant and company secretary, both the professions. And she has been actually having a privilege of having an experience working with one of the big four, which was actually big five reduced to big four now. So she has got an auditing perspective part of it in the various public sector and the banks and other things, etc., and all this thing. And she is also having a varied experience on merger and amalgamation experiences and the strategy transaction, etc. She has been actually with Mehta and Mehta as a senior partner with us. She has been working. She will be also able to presenting it. In fact, her presentation we have gone through yesterday, excellently presentation she has brought out, giving, especially sort of a checklist to the company secretary. I would say that when she shared the presentation, you will definitely able to appreciate. Welcome to Kinjal for your extraordinary homework, which you already done and which you are going to present. Over to Pramod, please.
How many minutes do I have, Bala?
You can have about 10 minutes.
Okay, I think that's more than enough. More than enough.
Yeah.
Thank you, Bala. Thank you, Sudhakar ji. And Kinjal, we are really looking forward to your presentation. I have gone through it. It is really very, very nice. To give the background, my first qualification was MBA in finance, and then I became a company secretary. And therefore, I was fortunate to start working as a company secretary and the finance controller in my early part of the career. And I realized that financial statements for us company secretaries, really speaking, are not as difficult or as complex as it is made out to be. The only reason as to why do we have this this perception, and that is because in our course curriculum, there is very little focus on the accounting standards or on the accounting or the accounting part mostly, I believe. So my submission to all company secretaries who are attending this particular session and who are not attending this particular session is very simple. Number one, remove from your mind this fear or this perception, misperception that financial statements are too complex for we company secretaries to understand and comprehend. It's not so. It really speaking, if you ask me, for all the company secretaries, it's just a matter of 3 to 4 days devoted uh, अंडरस्टैंडिंग ऑफ दीज फाइनेंशियल स्टेटमेंट्स. तो एक बार आपने 3-4 दिन अगर लग के पी एंड एल क्या है, बैलेंस शीट क्या है, कैश फ्लो स्टेटमेंट क्या है, पी एंड एल बनता कैसे है, बैलेंस शीट बनती कैसे है, कैश फ्लो स्टेटमेंट कैसे बनता है, because out of the three, the most complex is cash flow statement and not as much the P&L and the balance sheet. And further, also to get the background, Schedule 3 क्या है, Division 1 क्या है, Division 2 क्या है, Division 3 क्या है, within the Schedule 3. And everything, fortunately, have been listed and enumerated so lucidly in Schedule 3 with regard to the financial statements of those companies which are listed, and the financial statement of companies which are not listed, and also of the the NBFCs, I think. So it's all given very clearly, very clearly, very crystally. So it's not really on an issue. And obviously, as Sudhakarji and Bala have very rightly brought out, we as the company secretaries of our company do have to sign the financial statements together with the board members and CFO, which means it is but natural that we should really have good understanding of the financial statements that we are signing. Really speaking, we are signing the entire set of it, but then we should really have a good understanding of financial statements, that is P&L, balance sheet, and the cash flow. So this is what at this juncture I would like to mention from my side, and repeat it once again. Please remember, it is financial P&L statement and balance sheet and the cash flow statement are not as complex as we perceive them to be. As a matter of fact, with little bit of diligence and little bit of hard work and effort on our part, we can be as good in the reading and preparation of these financial statements as any other professional are. Yeah. So with this, I think I conclude my thought process at this juncture and would be happy to chip in as and when required. Thank you so much. Thank you.
Over to Sudhakar, please.
Very much, Bala and Pramod. Good morning, everyone. This was a contentious issue, that what is the role of the company secretary and how far he is responsible as far as signing the financial statements are concerned. I remember that in the early 80s, when I qualified, when I was signing my first balance sheet, at that point of time, I was not the finance person. I joined that company as a company secretary only. And I was grappling with the same question. I have nothing to do with that balance sheet and all, because as a company secretary, I was not involved at all. Let me put it this way, that I have not been consulted. I have not even been shown the draft of the balance sheet at all. You know that how the things used to happen in the good olden days. That point of time, the listed companies were very few, and the company which I was working, it was a very conglomerate kind of thing, a very big group of companies, but all were closely held companies only. Subsequently, when I got familiarized in the NIRC, and I have become the chairman of the study circle committee, in one program we have organized exactly on the same topic, more or less. What is the role of a company secretary while he is signing the balance sheet, and how far he is supposed to understand the balance sheet? The law then and the law now is more or less the same, whereas the responsibilities of the company secretary in those days were very few. Whereas the role of the company secretary is completely changed now. Enormous responsibilities have been entrusted upon him. His workload has increased 10 times to that of in the earlier, that in the late 80s or early 80s of the company secretary. So, according to me, Pramod, that as a syllabus if you see our syllabus of company secretaries, is in fact at par with the chartered accountants. Only thing is that there might be a specialization subsequently by chartered accountants. As far as subject knowledge is concerned, company secretaries are more or less having the same kind of knowledge. But what happens is once we join the companies, I'm telling you that with the practical difficulties, the amount of workload what the company secretary is having, to the extent possible, he want to shirk the things, whatever he can do. And one of those is this financial statements only. Why CFO is there, his accounts and finance department is there, they will take care of. In fact, 3, 4 webinars before we were talking about BRSR reporting. That also company secretaries got a tendency to either outsource or to push it to the ESG head. It is not like that because they don't want to do it. Unfortunately, there is no time available with him. But one thing company secretaries have to understand very clearly is whether we like it or not, as a key managerial person, the prevailing law says that as a key managerial person, you are the person who has to ensure that the company is complying with the provisions of the Companies Act 2013. Under Section 205, it is very clearly there. So whether we like it or not, we have to do that. Similarly, as a compliance officer under the SEBI listing regulations, you are the compliance officer, and as a company secretary, you have to ensure that whatever is there in the listing regulations, chapter 2, 3, 4, 5, and so on and so forth, you have to take the responsibility, you have to take the ownership. So because of that, what happens is very clearly in the financial statements, though Mr. V. Shankar's case, which Kinjal is going to discuss at that point of time, we will discuss in detail, though SAT says that you are only authenticating the financial statements. You are not wholesale responsible for that we will discuss in detail. But one thing is definitely there. You cannot simply say, I am only authentic, I have nothing to do with the financial statements. Because whether it is share capital, you have to take the ownership of the share capital, whatever is there in the ROC records, whether it is matching with that or not, whatever is there in your register of members, it is matching there or not, share capital reconciliation, and whatever the information you have to furnish under Schedule 3, you have to take that responsibility for that. Same is the case with other schedules also. Say, for example, in Section 186, wherein you are making investments and you are lending money and all those details are to be given in the financial statements. Suppose, say, for example, the CFO has overlapped and he has forgotten the accounts department, they have not given the details. Can you say that, look, I am not responsible for that? You have to take the responsibility, whether we like it or not. There are n number of things under the Companies Act, whether it is fixed deposits, whether it is bonus issue, whether it is declaration of dividend, unpaid dividend details and all these are to be furnished in the financial statements, and wherever that is linked to the company secretary's role directly or indirectly, you have to take the ownership of that. Finally, before I give a pause, I would also like to say is that notes to accounts to the financial statements is a very, very important thing. It may so happen the auditor might not be qualifying the report. He might not be giving an adverse remark, but he might be expressing an observation in the notes to accounts. So you have to see that whether it requires any kind of reference in the board's report or not. Suppose if you are keeping quiet and it requires a kind of a board explanation, tomorrow ROC may take that the board's report is not prepared as per Section 134, and he may issue a show cause notice and he may proceed further. How you will defend yourself at that point of time? So company secretaries have to become serious now. So what happens is that even in Mr. V. Shankar's case, that poor guy might be undergoing the RDL for the last 3-4 years. So whether we like it or not, tomorrow ultimately you will be held responsible or not, that nuisance value will be there. You cannot live in peace. You should be able to establish that you are diligent enough, you are vigilant enough, you are not negligent, unless until you establish this fact, you will certainly be held responsible for that. So I give a pause here and request Kinjal to go ahead with the presentation. The overall presentation, we'll discuss it further. Thank you.
So there one particular point you touched upon actually, the auditor's observations. And we actually came across in many of the organizations, not the listed one, unlisted public companies, etc., and other thing and all. The people, they don't want to put the qualification as such in the audit report. What happens is some or other, they try to put, I think Pramod will be able to elaborate more on that. They try to give a color, what you call emphasis on matter, EOM. That is what it happens. You exactly touch upon whenever the EOM comes in the audit report, the ROC definitely goes through it and he actually takes up the matter, whether it is the qualification or otherwise, what is this and other thing and all, these sort of the things which is actually happening. So this is one thing which I actually observed working with some of the public companies and closely held public companies. Yeah, Kinjal, go ahead, please.
In fact, before Kinjal comes, I will just give one more this thing. One of my friend who is a chartered accountant in practice, recently he got appointed in one of the companies as an independent director. The first thing what he did and he was supposed to do is also that he was going through the previous 3 years annual reports of the company after his appointment. There were huge contingent liabilities were there. And he obviously, any independent director, the first point of contact is the company secretary. And it is a listed company for your information, not a very big listed company, but a medium-sized listed company, fairly amount of about 3,000 plus crores turnover. He called the company secretary and asked him why the huge contingent liabilities are there. So he could not answer it properly. Then he asked 2-3 contingent liabilities. What is this? What is this? What is this at all? And he said, Sudhakar, I'm really surprised that company secretary has no clue about the contingent liabilities. So this is, I mean, it might be one of the case, I don't know. But certainly it is a very serious matter. If the company secretary has no clue about the contingent liabilities, it is not fair enough. See, why I'm bringing these points is, with all due regards to the company secretaries, today, whatever we are discussing, I am also a company secretary. Pramod is a company secretary. Kinjal is a company secretary. Bala is a company secretary. We are not discussing anything to defame the profession of company secretaries. Let me put that disclaimer first, because participants should not think that, Are, you are talking so mean about the company secretaries. We know about the financial statement. That is good if you know about it. If any of the participants are lacking anywhere, this is the purpose of discussion is we are doing a kind of introspection. Wherever we have to learn, we have to do it. If we are already doing that, absolutely no point, no problem at all. In 2 hours of our discussion, certainly there might be some kind of a value addition will be there to every participant. That much I can assure. Yes, Kinjal, please go ahead.
One more thing is there. Company secretary is the only profession who's actually there in the board meeting and the committee meeting right from the beginning till the end in the boardroom. He knows in and out of the company, right from the conceptualization, right from the strategy, right from the decision, right from the monitoring, implementation, everything he knows actually. So you'll be able to appreciate, as you rightly said, if we put as a point. To be very frank with you, one of the cases when you touch upon the contingent liability, really speaking, it is again, what you call revenue expenses was a capital expenditure. In one of the organizations where I was working, what they have done is they had an existing road, but they have actually made a cement concrete road inside the building, etc., and other thing and all, which is costing quite a good amount of the money. Really speaking, it is in the nature of the what you call profit and loss account. It is actually an expenditure, repair to the road. But companies somehow that they don't want to show repair to the road, they want to classify it as a capital expenditure as if they went the new roads. Accordingly, they prepared. Matter has actually came up. Since I was the company secretary, I told, sorry, this is an existing road. How can it be? There are a lot of discussion, etc. and other thing has taken actually, and ultimately we did the right thing. So this sort of the thing can be actually brought out only, as you rightly say, if we keep in touch with what is happening within the organization, if we are actually applying our mind, we will be able to be very fair to the shareholders when the statements are actually brought out. Yeah. Over to Kinjal, please.
Thank you, everyone. Good morning. Today's topic is a little ambiguous one when it comes to company secretaries, because we've been taught only company compliances, and we have been kind of looked at a role where we're looking at compliances of a company. However, we are responsible to sign the financial statements of the company, where we play a limited role. However, we do take we are signing along with the CFO, CEO, and directors of the company, taking responsibility of the financial statements. So today, the main aim of this webinar is to kind of explore what are the boundaries of our responsibilities and what role do we play in facilitating the finalization and signing of financial statements, and to what extent are we responsible, or the law, by law, can we be held responsible? So today's session's objectives are to understand the company secretary's role in the finalization of the financial statements, practical steps in the day-to-day life that can be taken to fulfill this role by the company secretary, to understand all the statutory requirements and practical steps that can be taken to comply with these statutory requirements, and to what extent can the company secretary be held liable, and to know the best practices in the industry and governance to ensure that we are up to the mark in terms of when it comes to this particular process of the company. So, looking at the liability of the company secretary by law, as per Companies Act, under Section 134(1), it mandates that the financial statements of the company must be signed by the chairperson of the board, or at least two directors, one of whom shall be the managing director, along with the CEO if he's a director, the CFO, and the CS. Now, again, I reiterate myself that over here, CS has been put in on the same pedestal as the board, the directors, the CEO, CFO, the previous three were essentially, the the CEO and directors essentially responsible for the entire operations of the company, the CFO responsible for preparing the financial statements. And the CS has been put in the same category as all of these roles. So let's look at kind of where company secretary's role lies in all of this. Now, when we look at financial statements, what does it constitute as per law? So one is, of course, the balance sheet, the statement of profit and loss account or income statement. Third is the cash flow statement. Then you have statement of changes in equity, and all the explanatory notes, notes to accounts annexed or forming part of the balance sheet, profit and loss, cash flow, etc. Now, if we dive into the core company secretary role in a company, we are looking at six major roles or functions that a company secretary performs. One is that of a compliance officer, where he's looking at compliances with several laws such as Companies Act, FEMA, taxation, labor laws, and other such applicable laws such as SEBI, LODR, etc. Then you're looking at timely filings with ROC, stock exchanges, and other regulatory authorities like RBI, SEBI, stock exchange, etc. Secondly, company secretary is also a key managerial person, where he's put in the same category as your managing director, CFO, etc. There he's maintaining statutory registers, filing resolutions and forms, and authenticating company documents for several corporate actions that take place. Thirdly, he is also the corporate governance facilitator, essentially being the guide to the board in terms of when it comes to principles, ethical standards, and director responsibilities. He is also responsible to ensure that the board processes are efficient, transparent, and legally compliant. Fourth, he is also a support to the board and committees. He is essentially responsible to convene board and committee meetings and shareholder meetings, draft notices, agendas, resolutions, and minutes, ensure proper conduct of these meetings according to secretarial standards, and to ensure that these are in compliance with Companies Act. Fifth, he's also serves in the role of a liaison between the management and the stakeholders, where he essentially acts as a communication bridge between the board of directors, shareholders, regulators, and government agencies. And lastly, he's also looked upon as an advisor to the company, where he's providing strategic advice on corporate restructuring, mergers, acquisitions, legal implications of certain business decisions, and secretarial and regulatory risks for several corporate actions that are taken by the company over the time. Now, when we look at all of these roles, none of it mentions preparation and finalization of the financial statements. However, again, we are responsible for signing such financial statements. So it kind of leads us to the bigger question, which is basically when the preparation and finalization of financial statements is done by the chief financial officer, statutory auditor, and the audit committee, how can a CS be held equally responsible for it? So now we can dive into where we as company secretaries lie, what our role is in this particular process. Firstly, so when we look at facilitating board and committee meetings, now the process through which these financial statements are finalized in an official manner are through meetings that are duly convened and ensured that are compliant by the company secretaries. So basically, we are ensuring that the board meeting is duly convened to consider and finalize the financial statements. We're drafting and circulating notice, agenda, supporting documents, including draft financial statements to Board of Directors as per Secretarial Standard 1 and Companies Act. Coordinating with Audit Committee for its review and recommendation before board approval. And one of the more important points over here is when it comes to related party transactions, where we are helping the management to put in place processes that allow related party transactions to be captured, disclosed, and approved wherever applicable in order to comply with Section 188 of Companies Act and rules thereunder, along with SEBI LODR Regulations 2015. Now, in many companies, identifying these related party transactions, many a times there is a lot of confusion in terms of who is to be held responsible when it comes to identifying and reporting and disclosing. Because only the finance and accounts team cannot function in a silo when it comes to these transactions, because there are the full company and various other departments also need to work in sync to be able to capture these related party transactions in time for approval. The company secretary is in a good place to help the management put in place processes that allows this thing to happen in a smooth manner. Now we are looking at compliance check that the company secretary can do to ensure that the financial statements are prepared in accordance with Schedule 3 of Companies Act 2013, Ind AS or accounting standards as applicable SEBI regulations, and disclosure requirements and directors' report requirements. Now, how is a company secretary in a place to check all of these things? So we'll dive into one by one each one of them. Now, if we are looking at Schedule 3 of Companies Act 2013, I've just put a kind of a reference for the format of this particular balance sheet, where we're looking at equity, liabilities, current assets, and current liabilities disclosures, that line items that come into Schedule 3 of Companies Act. And this is the profit and loss account reference for all of the line items that go into the statement of profit and loss of Schedule 3 of Companies Act. Then we look at applicability of Ind AS accounting standard, whatever is applicable to the company. So, as you may already know, that Ind AS was introduced in India in phases, where certain companies, it became applicable to certain companies over a period of time. Whereas still till date, banking and insurance companies do not follow Ind AS. Whereas mostly all other companies follow Ind AS above net worth of 250 crores. However, companies can voluntarily adopt Ind AS, and if they adopt Ind AS, must be adopted permanently. SME listed companies are not required to follow Ind AS. However, they can voluntarily adopt. And banking and insurance, they currently do not follow Ind AS. Now, phase one of the Schedule 3 looks at companies that follow GAAP or accounting standards. Phase 2 are the ones that follow Ind AS, and phase 3 are NBFC companies that follow specific format of Ind AS for their financial statement disclosures. Now, if we see that the financial statements as per Ind AS or accounting standards as may be applicable are prepared by the finance and accounts team or the CFO office of the company, as the case may be, it is verified and verified by for its true and fair view by the statutory auditor, and is scrutinized and approved by the audit committee and the board. So where does company secretary come in all of this? In what capacity can a company secretary verify the same? So, while, as I mentioned before, we are responsible for the process through which the financial statements are approved and finalized, that is the committee meetings, board meetings, shareholder meetings. However, we cannot be completely blind to whatever's actually in the financial statements. I think a bit of a verification from our end also needs to be undertaken with respect to what is being disclosed in the financial statements. Since as one of the KMPs and as one of the compliance officers as the compliance officer of the company, we do have access to certain information that is relevant to the financial statements that are being disclosed to the public. So hence it is in good practices at our end, it is required for us to kind of cross verify that the financial statements that are going out to the public are correct and are in sync with whatever data we have regarding the same. So we look at certain areas that and the information relating to which we have access to, and we can probably check from our end. So later on, if there is any kind of fraud taking place that we may not be have an insight into, or any other mismanagement that is taking place that we may not have control over, at least from our end, we may have done done our responsibility when it comes to checking and verifying things, and with respect to data that we had access to. So the first one we come to is share capital. Now, of course, share capital, we look at the authorized share capital in MOA. We have the statutory registers that we are maintaining that reflect the share application and allotment that has taken place over the years. register of members, the shareholding as per that, register of sweat equity shares, registers of buyback of securities, register of transfer of shares, even sign minutes when it comes to issues that have taken place over the years. That allows us to kind of reconcile the share capital that is being disclosed in the financial statements. Other places that we can kind of tally and cross-verify the disclosures in the financial statements is Form S87 in case of increase in authorized share capital, PAS4 for private placement, PAS3 for return of allotment, MGT7 annual return, Form MGT14 for resolutions passed in shareholders and board meetings, Form SH8, SH9 for buyback related compliance. So we are kind of essentially checking that all the approvals that we have, that we have taken for, say, any kind of issues that have taken place, only those are reflected in the financial statements, and nothing apart from that is wrongly reported in the financial statements when it comes to share capital.
Just
Coming to
1 minute, Kinjal.
yeah.
Please go back to the previous slide. So here, if you see that any kind of corporate action, for example, issue of any kind of shares, whether it is similarly sweat equity or if it is stock options, whether it is buyback, whether it is rights issue or a FPO, whatever it is, she has very beautifully given on the right-hand side the whatever the forms are to be filed, and the second left-hand side about the corporate actions. So in the whenever the financial statements are getting finalized, as a company secretary, you have to see that during the year, any kind of corporate action has taken place, that is properly reflected in the minutes, forms have been filed or not, and whatever the other necessary compliances are there, they have been done or not. That also needs to be verified. So if any kind of correction is there before it go to the auditors, the moment the draft financials are ready, of course, these days, in the major, all the listed companies, they are doing that quarterly results. They have to publish it because of that quarterly, what's called a review is taking place or audit is taking place. So even at that point of time also, whenever you are referring to the share capital, this thing, all these things are to be checked. Suppose, say, for example, if it is not a listed company, if it is a closely held public company or a private company, again, the procedure is more or less the same. So as a secretarial auditor, you have to see the same things, and as a company secretary in service, you have to comply with these things. Okay. Yeah, Pramod bhai, if you want to add on something to
No,
that.
I think you have summed it up very well. Nothing more to add from my side.
Thank you. Yes, Kinjal.
So we look at financial liabilities and borrowings. Firstly, when it comes to borrowings, a lot of frauds in the past have taken place when it comes to borrowings or deposits and other such areas. So let's look at what all we can check from our end to ensure that we are not kind of easily fooled when it comes to any kind of frauds that are taking place. We look at articles of associations in terms of power levied to the board when it comes to borrowings, along with Section 179 3D when it comes to how much and what approvals required when it comes to borrowing a certain amount of money. Then to see that the board is empowered to borrow within the limits set under Section 181C. If the borrowings exceed the aggregate paid up share capital, free reserves, and security premium as set in the section, verify that the special resolution passed by shareholders is along with MGT is done along with MGT 14. This is just to ensure that everyone in that a proper procedure is followed when it comes to borrowing excess amounts of money by the company. We're looking at Form MGT7 annual return filed by the company, and that kind of ties in with other corporate actions taken place during the year and the financial statements that are filed. Then we're looking at security creation under Section 181A and verifying any kind of special resolutions that are passed and the relevant forms and GT14 that are filed with it, and the charges such that are created on any kind of assets, and the relevant forms such as CHG1, CHG4, and CHG9 are filed, and if they and such charges are disclosed in a proper manner in the financial statements and are not kind of left out, and this is shown appropriately in the financial statements essentially. Then we're looking at register of charges. All of this kind of should be in sync and should flow into the financial statements essentially. Also, we have to look at the disclosure of material borrowings that is properly done in the board report, and reflects, correctly the borrowing amounts and over the years that have taken place. Then we're also looking at SEBI LODR reporting under regulation 30, 51, 52, 56, and 57 when it comes to borrowings. We also look at any kind of FEMA compliances that we have done under the external commercial borrowing compliances or any kind of FCGPR and things like that that have or any kind of external overseas borrowing compliances that we have done, and how that has been reflected in the financial statements. And we have to verify whether the unsecured loans are exempted, if any kind of borrowings are or our deposits are kind of shown interchangeably, and whatever is borrowing is shown as borrowing, whatever is deposits is shown as deposits essentially.
Yeah, 1 minute, Kinjal. Again, going back. Kinjal, again, go back to the previous slide, please.
Sorry?
Previous slide, go back to that.
Yeah.
Yeah. So here, one thing I want to bring it to the knowledge of the participants is about wherever the secured loans are there, and especially in the secured loans where you have given your properties, you have mortgaged in favor of the lender. Most of the times, what happens is when you are repaying those loans, we file the satisfaction of charge also. But the reconveyancing, the company secretaries or the promoter normally doesn't bother, because the promoters, they might, or the directors, they might not be aware of that. They might be trusting the CFO or the CS only by they will take care of all the compliances. Compliances have been done. The charge registration, that satisfaction of charge has been filed with the ROC. The two major things what as a company secretary we have to do is that at the sub-registrar's office, the reconveyancing is to be done. That means the properties what we have to mortgaged, where the lien has been created, that should be lifted. Otherwise, tomorrow you will not be able to sell it. Several times it happens that the loans have been repaid, the charge has been satisfied, but the reconveyancing has not been done. That is one thing. That even sometimes it is equitable mortgage also. The title deeds are lying with the lender. So with the banker, the title deeds are there. You have filed the satisfaction of charge. The banker is happy, you are happy. What about the title deeds? Nobody will tell you about it. Even the auditor will not ask you that by have you collected the title deeds, because it is not his prerogative to ask you. The second question is that you have to also see that charge satisfaction you have filed, whether the in the charge register of the ROC, whether that charge satisfaction has been registered or not. Suppose, for example, you don't have any secured loans as on date, you don't have any, but charge register must still be showing that as if there is a mortgage is still pending. So it is your responsibility. By merely filing the charge satisfaction is not done. See, of course, these days everything is on the system, so it might be automatically being done. But in the good olden days, it was manually being done. So it was the company secretary's responsibility. Several times, when my predecessors have not done certain things, I used to go and do that, because in my during my articleship training, Mr. D.C. Jain, who was one of the past presidents of institute, he told me these things. Sudhakar, please ensure that wherever you join as a company secretary, that if there is a secured loans are there, that the moment those loans are repaid, two things you have to ensure: go and get that charge registered, satisfied completely in the ROC's register of charges. Take a search report also for that. And second thing is get the reconveyancing done in the sub-registrar's office. And then during the course of my interaction with several company secretaries, especially the youngsters, I used to say this thing repeatedly. But this is the Guru Mantra, what I have learnt about 30, 40 years before, which I am now giving you people, so that please ensure this thing. Yeah.
Now we move on to deposits. If the company has taken any kind of deposits, we look at that compliances with Section 73(1), which is general prohibition on acceptance of deposits unless conditions of acts are complied with, is looking okay. Section 73(2), companies can accept deposits from members subject to prescribed conditions are followed. Section 76, eligible public companies can accept deposits from the company if this eligibility criteria is looked into. Articles of association, if the company is allowed to take such deposits, verify that with the forms filed with ROC, which is DPT1, DPT3, MGT14 for the resolutions that are passed regarding the same, credit ratings that are taken, register of deposits that is maintained, deposit receipts that have been issued, the deposit repayment reserve that is being reflected in the financial statements, minutes of shareholders, board, and committees when it comes to this particular corporate action. And with this, all of this should basically correctly flow into the financial statements and see that there's no any kind of discrepancy that is there. And everything is in sync essentially. And just to ensure that borrowings are not wrongly classified as deposits and any kind of advances for goods and services are accounted for. When we move to assets and investments, so again, this is another area that we can kind of cross-verify from our end, and check if it's flowing correctly into the financial statements, and everything when it comes to company records is in sync with whatever is being disclosed in the financial statements. So when it comes to assets and liabilities, we're looking at approvals of investments by board under Section 179(3)(e), which is powers of board. Shareholders approval required under Section 186(3) for when it is exceeding 60% of paid up capital plus free reserves, security premium, or 100% of free reserves plus security, whichever is higher. This Section 186(3). Limits on investment companies under Section 186(1), register of investments maintained under Section 186(9), Rule 12, restrictions that are put on loans to directors and related parties under Section 185 to ensure that loans are not disguised as investments. Investments in own shares that are prohibited by Companies Act, or investment in, say, the holding company and things like that. Rate of interest when it comes to related party transactions and all must not be less than prevailing yield of 1 year, 3 year, 5 year, 10 year of government security. As per 186(5), FEMA compliances wherever applicable. All of this, which is minutized, is done properly, and that information is correctly flowing into the financial statements. Form MGT14 for all the relevant resolutions that are filed, applicable to public under Section 179(3)(e), applicable to public companies. Form S87 if this investment requires issue of new shares, any kind of charges that are being created, such as CSG1, CSG9, on the assets that are disclosed properly. And although we may not have access to all the assets, information about the company, for example, stock and things, company stock, I'm talking about goods of the company as stock and things like that. However, we do have access to major assets and investments of the company that come to the board and the committees for approval, essentially. so that we can at least check at our end. Then we come to contingent liabilities and assets. As Sudhakar sir said, that even this is an important part of the financial statements of the company. Although this doesn't directly form part of the balance sheet and it comes below the balance sheet, these are extremely important line items to look into. So when it comes to contingent liabilities, these are liabilities that may occur in the future where company has no control over and the result is uncertain, and so but if that particular event happens in the future, then it will have an impact on the company, which may be negative in nature. For example, lawsuits which are pending, which may not come in company's favor, letter of credit, which will be crystallized if any kind of default takes place, bank guarantees, etc. Then we also look at contingent assets, where again that the company will receive an economic benefit of a future event that the company has no control over, which will have a good impact, a positive impact on the company. And this is not recorded in the balance sheet, but it is mentioned in the financial statements. Any kind of arbitral award that the company is awaiting, any kind of court settlement cases, etc. Now, we as company secretaries, these are the kind of issues that may come to our table, and we may have certain knowledge about it. We just need to see that this is being captured in the financial statements and a true picture of the company's operations are being disclosed to the public. There is no kind of showstopper event or any kind of corporate action or any kind of line item that is not being disclosed to the company, that if was disclosed to the public, might have a impact on the perception of the public about the company.
See, here also, one has to be just go back to in case of contingent liabilities, the companies should not be too liberal, at the same point of time, not too conservative in identifying a contingent liability. Because contingent liability, though it is not reflected in your financial statement, sometimes it may so happen. The auditor says that you have to create a contingent liability, and the company, either the CFO or the CS, may not even protest it or resist it. But unnecessarily, you should not be shown, because contingent liability, definitely a person, the stakeholders are going to have this thing, to have a look. And similarly, even the credit rating agencies, they are also going to consider the contingent liabilities. If they are on the higher side, it is not a healthy this thing. Say, for example, you have received a show cause notice from any kind of this, from income tax or GST or anything else. And at the time of show cause notice itself, you are going to create a contingent liability, even without even replying to that, or how you are going to do that. So one has to be very, very clear while identifying a contingent liability. So what my learnings are, you should not be too liberal. At the same point of time, you should not be too conservative also. Suppose you are not shown the contingent liability in the financial statements for 2 years and ultimately it turned into a liability, and it is a surprise to the stakeholders, then definitely somebody may challenge that your financials, that they are not reflected your true and fair view of the accounts. So it is a very tricky situation and need to be handled very carefully and very diligently also. Pramod bhai, if you can throw some light on this
Yes,
creation of or identification of contingent liabilities. Yeah.
absolutely. Sudhakarji, both under the uh, Indian GAAP and also under the Ind AS, you have separate standards which tell you as to when you have to account for a liability as a contingent liability. The sum and substance of both these standards, they are in terms of content, they are same. Number may be different with regard to these provisions. So where there is a liability which is likely to happen, but the economic outflow that can happen is not ascertainable. They cannot be measured, but there's a possibility that it can happen. So in such a case, you will account for that as a contingent liability. as very rightly said by Sudhakarji, it is important to account for contingent liabilities because stakeholders would definitely be interested in knowing, are there any areas of financial risks which are not incorporated in the financial statements? And any stakeholder would be interested to find that out. So they would also always look at the contingent liability. Now, contingent liability is always based on the estimates, but those estimates also need to be based on certain documents. So, say, for example, if you've received a demand notice, not the mere, very rightly said, not the show cause notice, but you have received a demand notice from the income tax department or from the GST department, which you are contesting. So the fact that you are contesting, that means, and the fact that you have received this demand notice from these departments, uh, obviously they will need to be recorded, and they will need to be recorded as a contingent liabilities. Now, in this case, you have received a demand notice from the department, which clearly says as to what is the amount of demand that they have raised on you, which you are contesting. So that amount becomes the contingent liability that has to come into the balance sheet. It has to be come into the balance sheet. So any good auditor would always be concerned about identifying such contingent liabilities. And it is quite possible, if the sufficient data are not available, they might suggest any number to be incorporated in the notes as contingent liabilities. And that is where the CFO and the company secretary need to examine it very closely and only incorporate an amount which they really feel can happen if the contingent event really materializes tomorrow. So this is how one has to take the approach. And सुधाकर जी, आपने बहुत सही कहा कि अगर आप contingent liability को disclose करने में careless हैं, तो 2 साल तक अगर आपने contingent liabilities को disclose नहीं किया, and suddenly in the third year the liability materializes, and now it hits your P&L and your balance sheet, at that time it is really going to be very embarrassing for the entire company, plus of course for the CFO and the company secretary. So therefore these things really have to be taken care of.
Both of you have certainly rightly touched upon the contingent liability part of it. As Sudhakar puts it very clearly, at the time of the show cause notice, we don't have to do anything, we'll have to analyze. But as Pramod puts it, demand notice comes, yes, there is an issue. Now, my experience, wherever I worked with the companies, what we used to do, we used to have a committee actually, consisting of finance people, operation people, and the people who are involved in the department, whatever it is, and plus the managing director and one of the expert in the director and company secretary. What we used to do, we used to, create a matrix. What is the worst thing can happen if everything goes wrong? That is one. Second thing is, what is the least thing can happen, what are weighing in our favor? What is the best thing can happen? We used to have this sort of the judgment. Many times it happened, there have been cases where the contingent liability has been actually created, but ultimately we know because of the precedents, etc. and all, nothing is going to be materialized. But nevertheless, we made a disclosure point. Yeah, this is the issue, but however, company fees in light of this, there is no contingent liability is likely to arise on that. So that sort of a decision has to be taken, which can be taken only working in the team mode in an organization. That is my experience I thought of sharing.
Very nice, Bala. And one more thing that I can add, contingent liability, among many other things, the audit committee really has to look at very closely. So the audit committees, it is a responsibility of the audit committee to ensure that all such items which are appearing below the balance sheet are given due consideration when they are reviewing the financial statements of a company before recommending it to the board of directors.
Another thing is that you may be knowing, Pramod, cases it may also happen. Company would have foreseen certain issue, they would have made adequate provisions actually. On such matters, you would have got the things actually received. But already it is provided in the books of accounts. In which case, a casual mention, this is what this company is getting started, you don't have to quantify because you already built in the books of account. That also can happen if the company has taken the precautionary measure. That also I have seen actually. Yeah.
Yeah, so basically is the differentiation between the provisions and the contingent liabilities. So
Correct.
when the view of the company is this is something which is definitely going to happen, right? But you do not know as to when will that happen. But you know for sure that it is definitely going to happen. So that means that that liability is really going to hit the company. So that is where you will make a provision, and that
Yeah.
provision you will make on based on the estimate. So you will
Correct.
based on your judgment, as you have very rightly said, the matrix that you referred, Bala. So that matrix will help you to find out as to what is the amount of provision that you must make on the estimated basis actually. So the matrix will help you to arrive at the estimate of the provision that you must make. So when you make a provision, then contingent liability is excluded because then it's not required because you have made the provision already in your P&L and in your balance sheet.
Yeah, correct. Absolutely correct. Yeah. Go ahead, Kinjal.
Yes, so many a times a lot of deliberation goes into the estimate of the liability that must be created. If it can be estimated, then like Pramod sir just mentioned, that a provision must be created, and if it cannot be estimated, then a contingent liability is disclosed. When we are deliberating such estimations the by the CFO and the audit committee, and that time I think CS can see the reasonableness of the estimations that are undertaken for such kind of events that the company sees it coming in the future.
So I can give you, Kinjal, an example. Where there may be a need to make a provision. Let's say there has been a fire at the plant, and uh, uh, and the plant, of course, was insured. So many times, rather most of the times, it would happen that even though your assets are insured, but there are certain exclusions, which means to the extent of exclusions, the company will not receive the compensation from the insurance company. Now, and the matter is lying with the insurance company, and therefore, in such cases, it would be appropriate not to make not to disclose it as a contingent liability, but make a best estimate and show the amount to the extent of exclusions that will need to suffer by the company as a provision actually.
Now, you can also do one more thing in the notes to accounts. You can clearly mention that the loss of the asset and the insurance claim lodged. That itself will give a this thing to you. Okay, the position is clear. You don't need to create a contingent liability as such.
ये एब्सोल्युटली सुधाकर जी, इस केस में आपको कॉन्टिजेंट लायबिलिटी क्रिएट करने की कोई जरूरत नहीं है, बट चूंकि
Correct.
हमें मालूम है कि हमने जो इंश्योरेंस पॉलिसी लिया हुआ है, and invariably all the most, I mean, I'm sure certain policies can have where there may be 100% reimbursement of whatever loss the company has suffered. In most of the cases there are certain exclusions, so to this extent the insurance company will not reimburse to you. So now, if you have taken such a policy, it is but obvious that this much of the loss the company will have to suffer, and therefore it becomes necessary to show this amount as a provision. And why as a provision? Because we do not know as to what is that amount exactly going to be. It may be slightly more, slightly less, but then it has to be taken to the P&L and the balance sheet as a provision based
Pramod
on
bhai,
the estimates.
these days, because of Regulation 30 of listing regulations, in case of listed companies, it is a very tricky situation. You have to intimate to the stock exchanges also. Whenever there
Absolutely.
is a possibility of a contingent liability is going to arise,
Yeah,
then it is going to have it is a material event or information which you
absolutely.
have to share with the stock exchanges within 24 hours of that.
Right.
So one
So,
need to be very careful, okay, but you should not wait till the end of the 31st March and when you are finalizing your financial statements.
true.
You have to also, if it is a listed company, please also keep in mind the Regulation 30 relevant provisions.
Very
Yeah,
true. So fire at the plant is definitely a relevant incident. So it has to be immediately reported to the SEBI for sure under the LODR.
correct.
Right.
Yeah, Kinja.
without waiting for as to how much is going to be the cost that the company would suffer.
True.
We look at other key areas also that we can probably check from our end, which is managerial remuneration that is disclosed in the financial statements. If that is in sync with all the approvals that have been taken in the notification remuneration committee, and that has been disclosed correctly. Now, coming to notes to accounts and disclosures, these kind of give additional information on the various schedules of the financial statements. Here, additional information has been provided, and at certain cases required to be provided. For example, the related party disclosures. Now, it is essential for us to check that this is one area which is reported correctly. All the outstanding balances that are being disclosed, all the transactions that have taken place over the years are being disclosed as per the approvals that have been taken place and captured by the company records of the company and the forms filed and disclosures made by the company. Any kind of other notes to accounts, for example, all these contingent assets, liabilities, and other such disclosures are being done correctly. And we also need to check that the disclosures made in the board report are also in sync with all the company records that are available with us.
In fact, in the notes to accounts, one more thing is certain times it so happen the auditors wants to make some kind of an observation, and it is not a it is not kind of a qualification, but auditors wants to bring a particular fact to the notice of the stakeholders. So that point of time, what happens is that both the company and auditors are in agreement. We will reflect that particular fact in the notes to accounts. And company also give its view in the notes to account itself. So wherever such instances are there, you cannot simply leave it there. You have to bring it in the board's report.
Board's report.
That particular
Board's report, yes.
reference to that note where
Yes.
that auditor had made some observations, and the note itself is self-explanatory. Like that kind of a statement is to be made in the board's report. If you simply leave it there, means your board report is not correct, and it can be again ROC will give a show cause notice to you, and you have to what's called to justify that particular thing. So please remember that though it is not a qualification as such, but it is an observation in the notes to account by the auditor, and you are giving a clarification in the note to account itself. So you don't need to repeat it again in the board's report, but you have to give a cross reference to that particular note in the board's report. Yeah, Kinja.
Absolutely. Absolutely.
Now we move to the third role that we do play in preparation and financial statements of preparation and finalization of financial statements. We also play a key role in coordination with statutory auditors and the CFO and the audit committee. Now there does happen a lot of back and forth towards the the finalization of the draft financial statements and audit reports. There may be observations by the auditors that are being addressed by the company. And during this phase, I think there a lot of times the company secretary is not involved. However, it is in the company secretary's interest to be involved in these kind of discussions, because it will, if there is any kind of a showstopper event that the auditor has highlighted, or any kind of discrepancy that the auditor has highlighted, then the company secretary then can check if the company records reflect the same, if the same has been provided, same information has been given to the regulators also, and no any kind of misgovernance has taken place. Additionally, they can also facilitate this kind of conversation that take place between the CFO team, auditor team, and the committee of the company.
Though,
And if
Kinjal, though you have mentioned here coordination with statutory auditor and CFO, but please also we have to add that secretarial auditor also, because secretarial auditor should be equally in sync with what is happening with the statutory auditor. Because statutory auditor, if he is qualifying something and secretarial auditor is ignorant about that, then there will be a mismatch and all the three will be in trouble. Okay. It has happened
right,
in case of Sun Pharma, the same thing had happened. All the three were not in sync with each other. And ultimately, everybody thought everybody will do it. Nobody has done that, and they were in trouble. Okay.
Basically,
right,
the entire exercise
Correct.
is primarily a teamwork actually.
Yeah.
So, and where everyone has their own roles. So the CFO team will have their own roles, auditors will have their own role, and the company secretary will have their own role. And ultimately, even though their roles are different, but their responsibility is same. And that responsibility is to ensure that the financial statements are duly prepared, approved by the reviewed by the audit committee, and then the board, and then the shareholders. So the roles are different, but the responsibility is still the same. And ultimately, you will work as per a plan. So you will have a complete checklist that by this activity has to be done. By this activity has to be done. By this the accounts need to be reviewed by the audit committee and the shareholders. So ultimately, this is how you will have to work in sync. And in my understanding, which I would like to mention here, see, as far as the coordination with the auditors are concerned, let it be the responsibility or the role of the finance team only, or the audit team only, because they are the ones who are liaising and coordinating with the auditors. So therefore, uh, uh, the company secretary, unless he is part of the finance team also, he should not take that responsibility, because there are chances of confusion in such a situation to happen, I believe. So this is only the word of caution that I like to mention here.
Pramod,
I
you
agree. But
actually, you said it correctly. But normally, what happens is the finance team only coordinate in all the audit related matters.
Right.
But when it is come to the draft audit report, where the company secretary role actually gets in, because normally what happens, it is the practice in almost all the companies. Sudhakar will agree with me. What happens is before the report is actually finalized, the draft form, the report is actually obtained from both the auditors, which is actually gone through the audit committee. But that is where, they are able to make out the board report actually. So in such a situation, the company secretary, which comes into the picture, so that, what happens, he gets both the people together. You see, have a look at it, what is it, what you are taken care of, anything is missed out, etc. Those sort of things, so that the synchronization take place, as Sudhakar puts it, with all the three people. That is where it comes. Normally, I also used to do the same thing. I used to call the secretary, I used to tell the thing, give the both the report, bring together, discuss, so that people are in the same footing. That is what I used to do. Yeah.
No, true, true. As far as the secretarial audit report is concerned, absolutely, you have hit on the nail. As regards the auditor's report is concerned, uh, as I said, unless the company secretary is also involved into the preparation of the financial statement, uh, in which case it would be better that the CFO and his team takes the responsibility of obtaining the auditor's report, a statutory auditor's report, because ultimately, if there are any issues in the auditor's report, then they would need to be sorted out by the CFO team and not by the company secretary. Company secretary has to receive the auditor's report for sure, as you have very rightly said, for the purpose of preparation of the board of directors report. But that is after it has been cleared by the CFO and his team as well.
no, I
And one
agree.
more,
The only
one
point
minute,
being
Kinjal,
that
Kinjal, 1 minute. Kinjal, 1 more minute. Let me add one more thing here.
yes,
Though I have said this in the earlier sessions also, that most of the times the auditors ask for a copy of the board minutes for their records. So, according to me, company secretary should not share the copy of the minutes because they want exactly the certified copy of minutes or copy of the minutes for their records. So, they can inspect the minutes. They can also ask for extracts of the resolutions, certified copies, extracts of the resolutions. The company secretaries may give it. But according to me, we should never give the certified copy of the minutes to the auditors because it is the only who can inspect the minutes. The inspection can take place by the directors, by the regulators, and by the auditors. Board minutes, nobody else can inspect it. And auditors cannot ask for a certified copy of the minutes. They can only ask at the most because they have to undergo the peer review. For that particular purpose, they need to have the backup of the documents. They can ask for certified copy of the resolutions wherever they require. Whenever some corporate actions have taken place or approval of financial statements and all, certified copies you can give it. But don't give the certified copy of the minutes.
Absolutely. Very, very rightly said,
Because
Sudhakarji.
the
Very rightly
reason being
said.
there may be any sensitive matters may be there because see that what happened is drafting of the minutes by different company secretaries in different ways. Some people, whatever the discussions have taken place in the board minutes verbatim, they record it, especially in case of public sector enterprises. It will happen. So how can we share the entire the minutes copy with the auditors? We should not. Okay. But sometimes it may so happen, some company secretaries, in fact, in the earlier session, they said, sir, my auditor don't agree, my CFO always bulldoze me and all. This things, by that those days have gone, the company secretaries have to flex their muscles. They got absolute responsibility on them. They have to convince the management, their CEOs, their CFOs. And once you are able to convince them with a logic, with a rational, and with a law,
They will
nobody
understand.
can bulldoze you. That kind of confidence you have to have it. Yeah, Kinjal.
Yes, yes, agreed. And I also agree that the finalization of audit report and the financial statements is the role of the CFO team. However, just the point being that the CS shouldn't be blind to any kind of observations that have come up by the auditor. And also, if the auditor suggests any kind of changes in disclosures, then such changes are also kind of checked for at the company secretary's end that are in sync with the company records that are there. Then we look at another role that we do play, which is documentation and record keeping. So we are responsible for the entire process through which the finalization of accounts takes place. So it is essential for us to ensure that the proper minutes of the board and the committee meetings are recorded, including the resolutions that are passed for approval of the financial statements. We were also responsible for maintaining of records of signed copies of financial statement, director's report, auditor's report, and related approvals. And along with all company records and financial disclosures that are aligned with these records that we are maintaining. Also, we can help in assisting the signing process. We to ensure that financial statements are signed by the chairperson of the meeting, or any two directors, including managing director, if any, CEO, CFO, and CS himself, herself, and check that all the signatories have signed financial statements physically or digitally as applicable. Disclosures in shareholders meeting. We're also required to facilitate circulation of the approved financial statements to the shareholders, ensure that the financial statements are properly laid before the shareholders for adoption. In the notes to agenda, with proper notice given within the specified period of time as per Companies Act and secretarial standards, and also guide the board regarding shareholder queries, if any, that come up. We're also looking at the corporate governance compliance for the company, which for mostly listed companies. And then we come to the case studies. in terms of all the cases where the company secretary's role has been kind of delineated by the courts in India. So the very recent one, which has been extensively debated, is the V. Shankar versus SEBI case in 2025, where V. Shankar served as the company secretary and compliance officer at Deccan Chronicle Holdings during financial year 2009 to 10 and 10 to 11. SEBI alleged that DCHL executed a buyback of shares worth 270 crores in May 2011 without sufficient free reserves. The public announcement signed by Shankar included misleading financials and understated loans. SEBI claimed that Shankar failed to exercise due diligence before authenticating the announcement and thus misled investors, a violation of Section 68 and 77A of Companies Act and PFUTP regulations. A 10 lakh penalty was imposed on Shankar under Section 15HA of the SEBI Act for aiding in misleading public disclosure without verifying the veracity. Now, this case doesn't exactly pertain to the financial statements published by the company, but this is with respect to financial statements relating to a corporate action of buyback of the company that was authenticated by the CS for the buyback of the company. Now, the SAT had another view on this. It essentially ruled out that once financials and offer documents are approved by the board, Shankar's role was merely ministerial authentication, not substantive verification. He was not required to audit or confirm underlying facts. They also highlighted the scope of the compliance officer. They said that the relying on Regulation 19.3 of SEBI buyback regulation, the SAT held that as compliance officer, his duties were limited to regulatory compliance and investor grievance redressal, and not verifying accounting substance. It essentially set aside SEBI's penalty on Shankar, reasoning there was no specific finding that he personally caused or sanctioned any misstatement. Investment board responsibility lay with the board and the auditors. So SAT essentially had an opposite view than the adjudicating officer at SEBI. However, this went to Supreme Court. And Supreme Court disagreed with SAT's interpretation of the company secretary's role in this particular manner. The Supreme Court noted that SAT erred in interpreting Regulation 19.3 by restricting the role to grievance redressal, ignoring its clear mandate to ensure compliance with buyback regulations. Essentially stating that the role of the company secretary was to ensure compliance with the buyback regulation. It asked SAT to relook at the matter, and the matter was sent back for SAT's reconsideration under the correct interpretation of Regulation 19.3, acknowledging that compliance officers' duty are twofold: grievance redressal and regulatory compliance. The court didn't address merits, only directed fresh analysis. So SAT reconsidered on this case and clarified that after reevaluation, SAT reaffirmed its view. Compliance officers are not auditors. Their responsibility is to ensure procedural compliance and not independently re-audit financials. It held this expectation overstepped the statutory roles. No personal liability was found in case of Mr. V. Shankar. SAT again found no direct involvement or negligence by Shankar. It concluded that verifying adequacy of reserves and accuracy of loan disclosures was the board's and auditors' responsibility and not the company secretary's, thus absolving him of personal liability. So, The key takeaways from this particular case study, in terms of what the courts drew lines in terms of company secretary's role when it comes to financial uh, disclosures, is that a company secretary's signature is primarily administrative, not an independent audit. Compliance officers must guarantee regulatory process compliance and not verify substantive accuracy of financials, essentially stating that we are responsible for the regulatory compliance of the particular financial disclosure that is taking place, and we are not responsible to individually check the accuracy of the financial statements like how an auditor does. um, Liability requires active participation or negligence and not mere title or signature stamp. Essentially saying that there was no active participation or any kind of fraudulent participation noticed in this particular case, where Mr. B. Shankar was actively involved in hiding the reserves or the additional borrowings that were taken by the company, or negligence. In case he had fulfilled his duty for uh, process compliance and checking that the company records were in sync when it came to this kind of a financial disclosure that took place. A company secretary is responsible to authenticate the essence of the financial statements and not verify and audit the same. Strict evidence and clear statutory boundaries are essential before imposing personal liabilities, thereby putting in place and drawing boundaries for role of a company secretary when it comes to financial statements that are published to the public of a company. Sudhakar sir, would you have anything to add in this?
Yeah, I would like to say, only thing is with this takeaways, as company secretaries, we should not relax, because I have seen that several company secretaries were very happy about this case law of Mr. V. Shankar. I'm also extremely happy, but at the same point of time, what it says is that the company secretary is authenticating the financial statement and he is not checking the veracity of the things. Means he is not taking the ownership for the figures there. But please remember, as I told you, as a key managerial person under Section 205, you have the responsibility of ensuring compliances as far as the preparation of financial statements are concerned. The information what is supposed to be furnished under the Companies Act for different corporate actions, whether that information is furnished or not furnished, that is your responsibility. So you cannot leave it to the CFO. What I would like to drive one point is that you have to have hand in hand with the CFO. No doubt about it, CFO will take care of everything, but that doesn't mean you have no responsibility at all. Compliance with accounting standards, it is your responsibility also. CFO is having his own responsibility. There may be some overlapping responsibilities. Directors are ultimately going to be held responsible. Though they are not preparing, the directors have to take the ownership for the numericals in the financial statements. But what I'm trying to say is, as a company secretary, you have to understand your own responsibilities. And for that, what you have to do is, whether it is accounting compliance, accounting standards compliance, or accounting policies compliance, or wherever the disclosures are to be given. At the same point of, say, for example, you are changing an accounting policy during the course of the year. And again, according to me, it triggers Regulation 30. Intimation has to go to the stock exchanges because it is going to have a financial impact on your financials. So these are the things. It is the responsibility of the company secretary. He has to sensitize the CEO, the CFO, the board, everything. And this particular thing, we should forget about it, that nobody listens to me, my CFO bulldozes me, and all those things, we have to forget it.
Yes,
If we are accepting the role of a compliance officer, we should have the courage, conviction,
to
and
stand up.
confidence, to drive the point, whatever you are supposed to do it. But let me say that recently somebody was asking me, sir, to fight a war, I need to have a weapon. No doubt about it, you need to have a weapon. You have the support of the regulator, and the weapon, what you have to have is nothing but knowledge. You should be clear about your role, your rights, your responsibilities. At the same point of time, what you are supposed to do, you have to do it. So at that, apart from having the knowledge, you should be able to also have to develop the ability, the skill set of articulation. Articulation means you should be able to explain to the CFO. By merely showing a rule book is not sufficient. Show the consequences. If you are not complying, what are going to be the consequences on the organization? Apart from the penal provisions, how about the image of the organization? These days, social media is so active. Any kind of dent to the image of the company is going to go like a wildfire across the social media. So the company secretary should be able to articulate all these points before the management. Yeah.
So one thing I wanted to add here. Some or other, the Shankar case actually goes back in 1956 Act. In the 1956 Act, the role was restricted as the company secretary compliance with the company law only. But the thing is, in the 2013 Act, the role has been substantially enlarged, as you rightly put it, mentioning what are the duties of the company secretaries. Here, as you rightly said, the compliance part has to be ensured. The compliance part is not only just having a figure. Whether the figure is adequate and is taking care of it, there is nothing is coming in the interest of the investor. That is there in such a question, as you rightly put it. Company secretary should be courage enough to question uncomfortable question to the CFO. Okay, it's all right. All right, what is the provision? What is adequate? This is what it is actually called for here. Probably if this case would have been 2013 case, the outcome would have been different, which I feel actually. Because in 1956 case, yes, it has come in his favor. If it is 2013, it would have been different actually. Yeah.
Yes. Actually, as far as the buyback is concerned, and if it is at premium, so that premium can come from the reserves or it can come from the share premium account in case if it is there in the balance sheet of a company. The figure of reserves is always frozen the moment your balance sheet is frozen. So if the company secretary, if this Mr. R. Shankar, if he has certified a figure which is as per the last audited balance sheet, then obviously he is not to be held responsible, because then the responsibility lies with the CFO, with the auditor, and with the board of directors. Because this figure of reserves has been frozen by three of them put together. And to the financial statement, the company secretary must have signed only as a matter of legal requirement. Now, if the company secretary has certified a document which is in the context of the buyback, where the figure of the reserves has not been taken from the last audited balance sheet, but has been put up just like that from somewhere, in that case, definitely Mr. R. V. Shankar is responsible, because this responsibility lies with him as a professional, that any number that you are certifying has to be based on some authenticated figure. तो मुझे ऐसा लगता है कि ये केस में परहैप्स ऐसा हुआ है कि मिस्टर वी शंकर, जब उनका बायबैक करने का समय आया, तो वो बायबैक के समय पे some documents that they need to prepare, they need to mention the figure of reserves. This figure of reserves in this document should have been picked up from the last audited balance sheet. Perhaps this figure has not been picked up from the last audited balance sheet. Any number, based on their own calculations, कि इतना premium पे करना है तो इतना reserve सही है तो इतना reserve दिखा दो. If that is what has been done, then obviously Mr. Shankar is definitely responsible. Now here also comes another gentleman who has a responsibility, and that gentleman is the valuation professional. So the valuation professional also, to decide as to at what premium the buyback can be done, he has to do the valuation. And when he has to do the valuation, he has to take into account the reserves figure which is frozen in the balance sheet, last audited balance sheet. So if the number that Mr. Shankar has given is not picked up of the reserves from the last audited balance sheet, then Mr. Shankar is responsible, and together with him, even the valuation professional is also responsible. But if he has picked up the number of the figure of reserves from the last audited balance sheet, then I think Mr. Shankar is completely innocent, and he cannot be held accountable and responsible. This is what is my submission is.
Sudhakar, I may add something.
Yeah, just
Yeah.
1 minute, Anil bhai, 1 minute hold karo.
Yeah.
Kinjal, it's over now?
There's one more case study.
Yeah. Just quickly complete it. After that, Anil bhai, I will tell about that. Okay?
Yeah.
Just let her complete the presentation. One more
Sure,
slide is
sure.
there. I think let her
Sure.
complete that, then we will discuss. Yeah.
Sure.
So
Go
she's
ahead,
taking,
Kinjal.
Sudhakarji, she's taking
Yeah.
another case study. So, in case something is to be discussed about the Sankar case, we can discuss this now. Otherwise,
Yeah,
the
I agree
context
with
would
you.
be lost. Yeah,
Yes. I agree with you.
yeah.
No, basically, what I was trying to say is that how this signing thing, became a bone of contention when the Satyam we took over and the Jayaraman.
I will tell you. I will, Anil bhai, 1 minute. For the sake of participants, I have to introduce you. Then
Sure,
you
sure.
will say about that.
Yeah.
But before that, I thought that let Kinjal complete her presentation,
Sure.
so the flow will be over. Then we will discuss about that.
Sure.
Okay? Yeah. Yes, Kinjal.
Just the quick second case study that we can look into, which is of Region Professional Academy, based in Madhya Pradesh. It filed its financial statement along with directors and auditors report on the MCA portal without signatures from directors and the statutory auditors, violated section 134(1) and 134(6) of Companies Act, which mandated that these documents must be duly signed before filing. Now, the ROC issued a formal show cause notice under section 134 for non-compliance. The company said that this was due to COVID-19 pandemic and there were staff errors and due to the difficulties we were facing because of it. It submitted that the signed documents during the hearing and seeked for leniency from ROC. However, the adjudicating order was passed in May 2024, where ROC dismissed company's defense and said that lack of signature is a strict statutory requirement and not excusable by external circumstances. It imposed a 4 lakh penalty, not just on the company but also its directors personally. It was a joint penalty that was given charge to the company and its directors, just highlighting how important it is to kind of uh, um, ensure compliances when it comes to financial statements, preparation, filing, finalization, and the final step of filing with the regulators. That's pretty
You're
much it.
absolutely
Thank you.
right, Kinjal. Actually, it is not only this particular case, maybe this particular case is a privately limited company. If CFO, CS also would have been there, I think CS also would have been equally penalized here, because this being a private company, we don't know whether CS is there or not. But there are n number of cases which ROC has taken, not only for not signature, even incomplete, non-attachment, and somebody has attached the last year balance sheet, copy paste. That also has actually happened. So all such things, they are actually seriously looking into the matter. When it comes to the compliances, one has to really take care of it. Yeah.
Yeah.
Over
See,
to Sudhakar, please.
yeah. See, in case of Satyam in 2008, we all know about Satyam scam. At that point of time, if I am not wrong, I think Janaki Raman was the name of the company secretary.
Yeah.
And Janaki Raman has faced, of course, obviously being a KMP. Of course, though that KMP was not there at that point of time, but he was the principal officer as a
Kinjal,
company
you can stop
secretary.
sharing the presentation. Kinjal, you
And
can stop sharing the presentation.
he too, along with the other directors and the CFO, he too was to face the ED, SFIO, and SFIO was also not there at that point of time, but RD and CBI, etc., etc. So he was to also sign the financials at that point of time. Subsequently, as we know that Satyam was taken over by Tech Mahindra, and we have with us Mr. Anil Khatri, who was the company secretary of Tech Mahindra, and about a couple of months before, he got superannuated and started associating with Mehta and Mehta. So I request Anil Bhai to share because of that what's called as passing over phase. You might have interacted with Janak Raman and sharing about as far as the financial statements are concerned around that time. Yeah, Anil Bhai, please.
Yeah. Thanks, Sudhakar. A wonderful presentation by Kinjal, and you made 2-3 good pointers, you and Bala both together, that company secretary should know the overall financial statement for sure, because he cannot just say that it's a finance responsibility. That was one, I completely agree to that. And two is regarding the charges which many people miss out. So I thought I'll tell about that as well, that when we acquired Satyam, we had some 13, 14 charges, and we means Tech Mahindra. I am no more with Techem, but it comes
No, you can
naturally.
say we.
Yeah. So, those were missed out, and even the Satyam team, unfortunately, at that point of time, Jayaraman was the company secretary, G. Jayaraman. So, uh, they also missed out to, get it, uh, corrected in ROC record or satisfied, etc. Most of the banks had closed, and just hearing the name of Satyam, people, even the bankers were scared to give any satisfaction letter or do anything. So, how important it is that at the AGM, two, three shareholders used to every year question the chairman and the board that so many properties are there and you are still not the owner of these properties. It was there in the annual report that these belong to Satyam, etc. And therefore, it is important that the company secretary, as you rightly pointed out, should take care of it and get it satisfied. And not only that, but the company's name should also come in the joint registrar's books. Apart from this, when we had this scam, then there, as you rightly said, there was a SFIO, ED, CBI, all those people had jumped into Satyam's office. And if we all know, in the bureaucrats, secretary is a very powerful person. Without his, concurrence, nothing can move in the government machinery. So they all pressurized Jayaraman and said that you are the secretary and you are the overall in charge. And because you have, signed, the other people have signed. They said other way around. And therefore you're responsible. And at that point of time, apart from Jayaraman, only two, three people were there who were not, caught. So what helped then is that he said that he is just a facilitator. And we also gave those clues to him from Techem because Satyam had not merged with us. It happened after 2, 3 years. So there's a document called annual report process, which is to be made, wherein you have all the pointers made that how you collate the information. For example, from finance, of course, finance CFO team and the finance team will give. Then for sustainability, the sustainability team will give. CSR team will give. Management, leadership team, codes, whatever coming in the annual report will be given by the respective people. So company secretary is just collating all this information. And because of that annual report process circulated 2 months ahead of the board meeting, and which proved that company secretary is just collating the information, and the same annual report process was also uploaded on the website of the company. It was there in the process, and it was sent to several people to whom the emails were sent for collation of the information. So this thing, a small process note, this has helped the company secretary to prove that he is not the final authority. So I thought I'll just bring this small piece of information, which is usually missed out by we professionals. So I thought I'll just bring this.
Great, great. Thanks, Anil bhai. In fact, you see that as far as Mr. Jayaraman's this thing is concerned, because I was associated with the institute around that time. So what I have been told is he was completely absolved without any kind of a scratch from the institute side also, because ICSI was also to examine his as far as the disciplinary committee is concerned. They have examined that. And of course, that what I came to know was he could establish himself
Yeah.
that as if he was not at fault at any stage. So it is in fact, I'm sure that he must have gone under a tremendous what's called as mental stress around that time. But still, he could
Yeah.
establish himself that he did his duty or he discharged his responsibilities the way he is expected to do so.
Yeah.
So that's why I always say that doing work simply is not sufficient. Always you have to have proper record, proper processes, proper responsibility matrix, delegation or DOP. All these issues are to be there. Normally, what happens is because of our rat race, we give least importance to the paperwork. As far as the company secretary is concerned, whether we like it or not, we have to deal with paper and we have to die with paper only. That's what I always used to say.
Yeah.
your record should be clean. In fact, when I was in Reliance, okay, for every board meeting, the moment board meeting is over, within 15 days, we used to have that binder of the backup papers. Right from the time the stock exchange intimations, the agenda paper, the backup papers, the tabled items, ultimately the draft minutes till such time, we used to put everything in this thing. And whenever the secretarial auditor comes, we used to give that binder to him. That's it. No other paper, no files, nothing is there. So with that, what will happen is you can establish the facts of the case very clearly. Same is the case with related party transactions also, okay, that I always used to say to people that whenever you say it is an ordinary course of business or arm's length, you have to have proper paperwork, then only you will be able to establish it. I think Bala, now quickly take up the questions which are there in the chat box, please.
Absolutely, you're right, Sudhakar. Those binders helped even the investigations because all the binders were ready to show to the EDs and the likes, SFIOs and the likes.
True.
Thanks.
Yes,
Sir,
Bala.
CS has no role as well as access to the finalization account. Then as to why he will actually responsibility in certifying the same in the MCA portal. He should be actually shielded from any unfollowed event.
So, Pramod, by
discussed this.
default, you are the person who has to answer all the questions. I
Okay.
will add wherever.
Yes,
Yeah.
yes. Can you please read it out once again, Bala?
CS has no role as well as access to the finalization of accounts. Then,
Right.
as to why CS will take responsibility in certifying the same in MCA portal, he should be actually shielded from any untoward event.
Okay, Bala, there are two different things actually here. Number one is finalization of the financial statements, and number two is the filing of the document with the ROC for the purpose of compliance. Now, as regards the financial statements preparation and finalization, apparently the company secretary has no responsibility, generally speaking, unless and until, as I mentioned earlier, there is a situation where the company secretary also have the responsibility of the financial statement preparation. That happens many times. I'm sure you would remember there used to be a time where the company secretaries and the CFO used to be together. The same person used to be CFO and the company secretary. So that in that case, he would have both the responsibilities. In this question, Bala, जहाँ तक preparation of the financial statement is concerned, company secretary has no responsibility. If something is wrong, as I said in the context of V. Shankar also, कि अगर उसने बैलेंस शीट से फिगर उठाया है, उसकी कोई जिम्मेदारी नहीं है. लेकिन अगर उसने बात बायबैक के सब्सिक्वेंट डॉक्यूमेंट में कुछ कॉन्कॉप्टेड फिगर डाल दिया है, then he has a responsibility. So for filing the financial statements, he is responsible. So that responsibility lies with them. He is not responsible for anything that has gone wrong in the preparation and the finalization of the financial statements.
Many companies are fudging books of accounts. There is no serious audit. PCS in his report declares about no role. Then why
Yes.
ornamented certification of the PCS? That's what somebody is asking.
So the moment you realize that there is such a thing happening with a company where fudging is happening, the only thing that you can do is quit that company immediately. Don't stay in that company even for one more second. And when you're resigning, clearly write in your resignation letter, the reason behind my quitting this company is I find certain things which are not in line with everything that you mentioned, so that your tracks are safe and secure.
Was working in a listed company in Calcutta, signed the profit and loss account and the balance sheets in 2019 as a company secretary. ROC filed the criminal complaint against me, and the signing directors do not disclosing the provisions or interest in the director's report, as the company had been NPA with banks. Been writing to ROC but no reply. Please help me saying what can I do as a CS?
This is a specific case, Bala. I think this is not to be answered according to.
Okay.
This can be discussed offline, not but online. Yeah,
Right.
next.
I think very right, Sudhakarji.
One more important role of the resident director appointed by the wholly owned subsidiary foreign companies as non-executive director. They are asked to sign the financial statement, though it is not statutorily mandatorily. Please include this also as a small additional topic for the knowledge of the senior CS who are actually taking the role of the residential director.
Okay, this question is, I think, slightly out of the context. So again, I think we can skip it actually.
When the second auditor certifies, should he issue whether it can be any date after the financial year? No, I think we should not talk this. We talked even earlier also. What should be the date, etc. That is not relevant here.
Correct.
Actually.
Yeah, you are right.
If we do not sign the balance sheet and the profit loss account as we are told to leave the company, the signing papers came only for the signing and no time is given for going through the papers. CS is actually quite helpless as he has to quit and not signing the balance sheet, etc. I think this also I won't answer because Sudhakar has already said it. You should have the courage of conviction. You should have the things set up. Your voices need to be heard. That is what we'll have to do.
And that's number one. And number two, this gentleman should tell the management, you don't have to ask me to go out. If you are not professional enough to give me enough time to go through these financial statements, I myself will go. Thank you so much.
Does audit committee recommend or review the financial statements? As per the understanding, audit committee and the board have actually distinct role in the approving it. No, we won't discuss this question because this is not related. Actually, people are aware of what is the role of the audit committee and the board.
But Bala, I can just mention here. See, audit committee really has a very prime role as far as the financial statements are concerned. As a matter of fact, audit committee is responsible for anything and every. When I say responsible to ensure that a thorough review is done of everything which is put up before the board. Ultimately, the call has to be taken by the board and responsibility will lie with the board. Audit committee has to do a thorough job. So what they have to do.
You are
And
absolutely correct.
That is why the audit committee is supposed to comprise of the people who are financially literate.
You are absolutely correct, Pramod. In fact, in many organizations, audit committee meetings are longer than the board committee meeting in approving the financial statements.
Absolutely. Absolutely. I mean, I know one company, Balak, I will not mention the name. The audit committees are really the committees that discuss everything. The board meetings, fast, close very fast. But since this company is seeking my advice, I told them, please follow the process, as it should be. No compromises, no complacency. Whatever is written in the rule book, it has to be followed exactly.
Since when, under which section of the CSR record authenticate finally is better directors, auditors is signing? I think these are all you'll have to discuss. Procedural matter is all already mentioned.
Bala, I would like to add one more thing also is, especially in case of final accounts, okay, the best thing is, according to me, that even if independent directors are not part of the audit committee, they may be invited to join that audit committee so that the discussions they will be in sync with. Executive directors anyway know about that. So you can call all the independent directors, though they are not members of the audit committee, they can be invitees so that they will be able to understand and appreciate the financial statements. And the pressure of time on the board at the board meeting will be reduced substantially. Several companies do that.
Yeah, absolutely.
Just to add,
and more so, those independent directors who understand the finance but are not part of the audit committee, such independent directors should definitely be invited to the audit committee, when the financial matters are being discussed.
Yeah, that's what I said.
Correct. Just to add, as a good practice, before the board meeting, Q4 board meeting, there would be independent directors meeting religiously held, and wherein the audit committee will give all the inputs and suggestions, including the red flags, if any, raised. And that gives a complete knowledge to the independent directors. So that practice also can be adopted.
Company secretary is witnessing the signature of the directors and CEO while putting the signature on the audited financial statement. It is very simple, and authorities and offers are complicating. Can you accept this school of thought?
No, it's not. It's not correct at all. The company secretary is not merely witnessing the signature of the directors happening on the financial statements. He definitely has a responsibility. As a matter of fact, in my view, the sequence of signature would happen. First, the CFO would sign, then the company secretary would sign, then the directors would sign, and then the auditors would sign. So when the company secretary is fixing the signature, he is fixing it as a responsible person and not as a witness.
Statutory
I agree with that.
Statutory auditors have issued AIFs, audited financial statements, with a true and fair view and with no qualification. However, during the course of the second auditor, the audit process found that one of the 5 items is actually Schedule 3 presented by the statutory auditor is erroneously put under the head other than the head where it is actually required to be put. Still, the same is considered true and fair view in the proceeding, and which has had the significant impact on that line item is put in that right place. That
At
means you
this
have to qualify.
बाला, at this stage, बेटी अभी भी बाप की ही है, तो अगर कुछ करेक्शन करना है तो कर लो.
Correct.
सही बात.
Correct. Can you elaborate to verify whether unsecured loans are exempted under the deposit rules?
Maybe Sudhakar ji, you would be the right person to answer
Unsecured loans
this
are not exempted deposit because see that unsecured debentures when they are there, if it is accepted from an individual, definitely it is a deposit. But if it is from a company to company, it is exempted deposit. So one has to be very careful. Unsecured loans, whenever you are taking it, you have to see that it should not consciously or unconsciously fall into the definition of deposits. If it falls so, you will be in trouble. That's why what happened is that whenever any unsecured debts, of course, this also, this company to company, some people, they say, no, that also is not to be exempted and all those things. I'm not getting into that because we have taken a view that company to company, because the wording, if you see that by whatsoever nature it may be, it is an exempted deposit. So if that unsecured debentures you are issuing it, if it is subscribed by a company, according to me, it is an exempted deposit. But if it is an individual or a partnership form, it is a depositor. So whenever you are issuing unsecured debentures, in the offer letter itself, you have to write very clearly who can subscribe, who cannot subscribe. Okay.
In fact, Kinjal has brought out this issue in one of the presentation. You need to specifically check this particular item that was actually there in the checklist actually.
Correct.
Since the secretarial auditor certifies one sentence that all the requirements of the Companies Act 2013 have been complied with, where section 129 states about the fair view opinion, cites statutory auditors and secretarial auditor as such preparation has significant impact in the auditor financial statement. What is the position of reporting such cases?
Question is not clear to me, Bala.
Since the secretary,
Bala, I can answer this question. Compliances are different to that of true and fair view. True and fair view have nothing to do with the compliances. So as far as company secretary is concerned or secretarial auditor is concerned, they are talking about the compliance part. True and fair view part is of the responsibility of the statutory auditor, not of the secretarial auditor.
Absolutely, you are right, Sudhakar, because true and fair view is actually the opinion expressed based on the inspection of the audit of the financial
accounts.
Whereas, as you rightly say, it is actually secretarial auditor certifying everything is complied with. You are absolutely brought out right.
Yes.
Creation of the charge is also need to be created within the time limit as agreed in the loan agreement. Otherwise, financial institution asks penal charges and send for the loan tenure. That is true.
Yeah, correct. That is okay.
And two things are completely different. And in any case, the financial institutions will not give you longer time than what is stipulated by the ROC or the. So you, in any case, have to do it within 30 days. So if you don't do it within 30 days, you are defaulting at both the places, and which means financial institutions will be within their right to levy any penalty that they must have mentioned in the agreement.
Sub-registrar office, the original land deed, land papers are actually submitted back to the trustees appointed by the lenders, but the sale deed is not changed as owner. So why sub-registrar office?
I think this point was very rightly dealt by Sudhakar ji in the bit of the discussion, and I fully agree with whatever Sudhakar ji has said, that precautionary step has to be taken.
Can we get the presentation of the webinar? We have been telling actually in every webinar, presented PPT is actually not shared. The recorded webinar is actually disseminated through the YouTube, for which you have access. You can actually access, which contain the PPT, please. For understanding the section 186(3) limits, do we need to check the portion of the at least audited accounts as on the present date? These are all
No.
academical questions you should know.
But in any case, it has to be the last audited balance sheet.
Correct.
And I would just like to mention here, because there was some discussion happening somewhere, and somebody mentioned that the credit balance lying in the P&L is not to be considered as part of the reserves and surplus. Now, in my view, it is definitely part of reserves and surplus, so long as it is standing on 31st March of the year in the balance sheet of the company. So it has to be taken into account as part of the reserves.
Or decreed and expected recoveries or bad debts contingent assets.
Can you repeat it once again, Bala?
Or decreed and expected recoveries.
Right.
Or bad debts or contingent assets.
So on one end, you are saying recovery. So the question is saying recovery, and on the other end, it is saying bad debt. So the court has given the decree in your favor that you can recover that amount. So based on the decree of the court, you can take this amount not as a bad debt, as your regular receivable. So
Only
long
that
as
it
you
is a
feel.
liability, it is not a contingent liability. For the other
It is
party,
an
it is a
asset.
liability,
It is an asset.
not a contingent liability.
Yeah, and for other party, it is a liability. And my only submission would be here that many times, even though you get the decree, but the financial position of the debtor is so bad that you will not recover that amount. So in which case, even though you have got the decree, it's better to record it as a bad debt only. The only challenge that you will have, that you may not, the income tax department may question you.
Correct. The enforceability of the degree is the question mark actually in many places.
Yeah. Correct.
Do we need to disclose the financials, the show cause notice received for SEBI inspection and the merchant bangle, but we don't have the amount, such future identity yet? What should be the disclosure in this financial? I think we discussed enough actually.
So we
contingent
discussed it,
liability,
yes.
what is the thing,
Yeah.
demand
Only
notice
when,
and etc. Yeah.
Correct, Bala. Absolutely right.
Whether the corporate guarantee without any quantifiable financial commitment is a contingent liability?
Corporate guarantee, when it is given, okay, it may not be quantified in the document of the corporate guarantee, but the amount which this corporate guarantee is protecting at any given point in time can definitely be ascertained from the financials of the company in whose favor this corporate guarantee has been given. So whatever is outstanding as per the beneficiary of the guarantee, उनके financial statement के हिसाब से, on the date of the balance sheet, how much is the loan outstanding, how much is the interest outstanding, all that will have to be disclosed as a contingent liability.
For an insurance company, is there any percentage assigned for contingent liabilities for provision purposes?
For the insurance company, okay, so now there is going to be another Indian accounting standards 117, which is primarily going to focus on the insurance. So I'm sure there must be some provision, but then I would not remember at this stage if there is anything which is prescribed, for the insurance companies.
In practice, if not very good listed companies, CFO dominates CS. Hence, CS become quite powerless as CFO and MD go hand in hand. Hence, both do not listen to the view of the CS.
I would
Take multivitamin
100%.
tablets here. Take multivitamin tablets and become strong.
Yeah. I would 100%, no, I would not 100%, 1000% would agree with Sudhakar ji that you have to stand up actually. I mean, you cannot, surrender to the CFO. And the only tool which Sudhakar ji has very rightly mentioned in your hand is your knowledge. So, आप knowledge लो or responsibility लो. So, if once you take these two things with you, you can fight any battle, and you should never surrender. CFO has not come from a different planet. So he's also from here. You're also from here. You only need to ensure that your competency, capability, and knowledge level matches his, not exceeds his. So then, instead of he dominating you, maybe you can try and dominate him, but don't do it. Be at par.
In fact, Pramod bhai, that in several forums I said this particular thing because whenever I have been told that CFO bulldozes me company secretary, I get irritated and agitated. Several times I said this thing, and somebody used to tell me in some forums, people used to say that, sir, you become senior and you can say anything and get away. I said, look, I have become a senior, but at one point of time, I was a junior only. But one thing is there that I always used to say, if you have to do G Huzuri, then graduation itself is sufficient. Why you have to do chartered accountancy and company secretaryship here? I always used to say, bhai, I burnt my midnight oil. I sacrificed my prime youth to attain these 2 degrees. After that also, if I have to do G Huzuri, then what for it is? So
Absolutely.
that courage was
Absolutely.
there right from the beginning. And then only with that conviction only I was able to say that company secretaries are not less than to the, if they are not superior to the chartered accountant, they are not inferior to a chartered accountant.
Absolutely. Absolutely.
As per Rule 5.2 of the Company's Appointment Remuneration Management Personnel Rules 2014, the company's appointment remuneration manager personnel rules, whether this is applicable to the private companies also.
It is not connected to this webinar.
It is not connected at all, number one. Number two is remuneration is not applicable to private company. Private company can pay any remuneration what they want.
Any remuneration. Absolutely.
CNAJ auditors always ask for the copies of the minutes. As one has to provide them the same, can a company refuse to do the same?
See, again, as Sudhakar ji has said, and I also mentioned, you should never give the minutes of the minutes of the meeting en masse कि उसने मांगा और आपने निकाल के सर्टिफाई करके दे दिया. No, you as a company secretary, see these are the occasions where you can assert your authority. So even if it is CAG, so what? You can always ask him, sir, as a company secretary of this company, I have the responsibility to work in a professional manner. If you want any particular, if you have a reason to ask for the minutes of a particular item, please tell me as to what that item is. I will take the extract, certify it, and give it to you. I am not in I'm not in a position to give you the entire minutes to you. Not possible.
How CS can authenticate financial statement? He is not a part of the audit meeting team member.
No, there is absolutely no problem in the company secretary certifying the balanced financial statements. Remember what he is certifying. He is not certifying the process which has undergone. So he is certifying the documents which have been prepared by a competent authority, which have been duly filed with the respective authorities. So he is only certifying कि ये जो document मैं certify कर रहा हूँ ये वही document है which it is supposed to be meant. So if I am certifying the financial accounts of Reliance Industries as, for example, as company secretary, that means मैं Reliance के ही का certify कर रहा हूँ. So there is absolutely no need for him to be the authorized signatory, for him to be the preparer of the financial statements to certify. Definitely not. अभी simple example, बहुत सारे documents हैं हम जाके नोटरी से certify कराते हैं तो क्या नोटरी क्या वो सबको पीछे से जानता है कि उसने क्या किया? नहीं, he is only certifying कि relevant document है. That's all.
Considering the given case of the study of the Shankar versus SEBI at the outset and latest IPO, where his role not to audit the same, is it appropriate for the CS to authenticate?
I think I have answered this question already.
Yeah.
I also seen some of the AOC4 document filed by some of the company without the signature, but only Word document. I have actually pointed out the same in my search report. Okay, is for information.
4 लाख की पेनल्टी का इंतजार करो.
What all audit company secretary can undertake other than the statutory auditors? This is also not relevant question, I think.
Right. Next.
I've been offered a designation of the CS in the private company due to demise of the current CS of the company few months back. But many non-compliances happened after his death. Please advise and help to my decision. No specific question. I don't answer this question actually.
Start working immediately on every non-compliance. Finish them as quickly as possible. Bring it to the board notice of the board of directors of the company. You have appointed me as the company secretary. I noticed these are the non-compliances as it stands today. I am working on them and keep that on record on the board.
One thing is there, Pramod Bhai, when you are taking over as a company secretary, you are actually inheriting all the past events also for which you become responsible. Actually, as you rightly said, What is required is the rectification action rather than getting to the justification action, why, what, etc. and other thing and all. We'll have to work on that. Yeah.
And just don't do the rectification. Put it on record. These are the wrongs which I am correcting.
Yeah, that is right. As you rightly said, record has to be created, but at the same
Yeah.
time, things should be set right, compliance should be met. That's what I meant.
Absolutely.
If a company has violated a labor laws or population or pollution control laws, which are actually applicable laws of the company, what will be the liability of the CS of such company?
See, for the labor laws, under the Factories Act, the company has to file someone as occupier of the factory. So the occupier of the factory becomes the prime person responsible for any non-compliance with the labor laws. So it is he would be responsible for the non-compliance. Company secretary as the compliance officer got to ensure that the factory manager is made aware, not informally but formally, as to what his role and responsibilities are. Every time when there is a board meeting, he should also obtain a certificate from the factory manager and all such people, confirming that all the requirements are being complied by them.
And please remember that the occupier is supposed to be a director. He should be on the board. That's why it is the responsibility of the company secretary to take care of the director. So if not directly, indirectly, it is your responsibility. You cannot completely keep your eyes shut.
Shut, absolutely.
Again, coming back, Sudhakar, as you rightly say, the company secretary's role has been actually specified in the 2013 Act. And in the 2013, the Act very clearly says that not only you are complying with the requirement under the Act, but you are ensuring the compliance under the other Acts. So that means his role is there. Although he himself is not ensuring, but he has to see that the insurance is actually being done. For that, he has to aid. That is there. Yeah.
Absolutely. Actually, I would always mention that we as company secretary should always be, going out and accepting more responsibility. Because by accepting more responsibility, we improve and enhance our own competency, our own capabilities. So, which ultimately is going to help us only in our career. So that is what we company secretaries really need to come out of that comfort zone. कि मैं company secretary हूँ, company law is my area. No, go out of it. You can do everything possible under the sun.
See, that's why there is a saying, Pramod, responsibility brings power and power brings responsibility.
Absolutely, absolutely, absolutely.
Sudhakar, somebody has put actually hat-trick club statement that CS and CA are mutually not inferior by one of the speaker. I think it goes to you. Okay.
Absolutely.
Is there any provision regarding the loan given by the director, operational expenses at the initial of 3 years and after coming the not position, they repay the loan, what happened? I think this is not the relevant question. I won't deal with it. The AOC 4 mentioned by me are not filed by me. I have seen going through the AOC 4 filed by the ROC and preparing search report for the banks, etc. Okay. He is, I think, addressing to your 4 lakh
other question. Yeah, in the context of the...
Okay. That's all, I think so. So all the questions are over with this. So we come to the end of it. If any people raise the hands, other things and all, probably we can ask them to speak. Let me see. I don't see there is any hand is risen actually. One hand I can see actually, which is actually risen. I think it is Vasanti Latha. You are there actually? Vasavi Latha? If you are there, you can unmute, you can speak. Are you there? Vasavi Latha, are you there? If you are there, you can unmute and speak, please. No, I don't get a response. I think we can close the session, Sudhakar.
Please do that.
At the outset, I would like to express my sincere thanks. Today's session was excellently good. I can see the participants closer to 300. Even in the beginning itself, it was actually there. It shows the definite, knowledge learning of the people who are actually coming forward, who want to know more about it. It is very good webinar organized and very good topic, especially at the time when the finalization, etc., and other thing and all taking place and annual general meeting is going. It really, really gives the extraordinary knowledge today to reconfirm what we are. I am personally thankful to Pramod for excellent knowledge sharing and as well as Sudhagar. And I'm also thankful to Anil, who has actually shared his thoughts, what actually really happened with Satyam takeover and whether it was an insight information which you actually learned here. One thing I can definitely understand whenever the company secretary comes on, what is the stress and tension you would undergo and other thing with all those things. And we ultimately has to be rise to the occasion, having a courage of representing the things, courage of conviction. That is what it is actually required. I am very sure that we will be able to do many things with the regulator support, because regulator is more and more recognizing in far with the statutory auditor, especially which has happened with the listed companies. There is no time far away for recognition coming in the other type of companies as well. With these words, I declare the webinar is actually closed. We look forward to the thing. And one more thing, I would like to also appreciate the excellent presentation prepared by Kinjal. She has put it very nicely and she has actually categorized what is the role of the company secretary, each of the thing. Not only that, one more thing is that she has given a ready-made checklist, I would say rather. Claps. Thank you very much, Kinjal.
And
Extraordinary.
very well articulated also, Kinjal. Keep it up and then do more presentations in the coming webinars.
Absolutely.
Yes.
Thank you.
Thank you.
Thank you.
Have a good
Thank
day.
you.
Thanks.
Thanks,
Have a
thanks
nice
to all of
weekend.
you.
Thank you.
Thank
Bye,
you,
Pramod.
Sudhakar
Thanks
ji.
for
Thank
once
you,
again.
Bala. Thank you, Kinjal. Good to see you, Anil. Thank you.
Thanks.